Hello friends, I am back with another video on how to trade swing using support and resistance. So what is support and resistance? Support and resistance basically is where prices, when they come down, they bounce off support or they hang around a bit and then they bounce up. And what is resistance? Resistance is something like when prices are going up, they reach a certain point and then they bounce off that and they start coming down. So, in simple words, basically, it's like you're standing, say, in your house, and you have a ceiling, say, 12 feet above you, and you take a ball in your hand. That ball is nothing but your price. So, when you bounce it on the ground, it bounces up. It hits the ground and it bounces up. So that is because the ground is acting as some sort of support. Similarly, if you take the ball and if you throw it up on the ceiling, it will hit the ceiling and come back because the ceiling is acting as resistance. So I will show you this on the chart here. We have RT drugs here on the daily time frame, and we have the chart here. And this is a I'm recording this in the live market today. So, but that's fine. Uh, so this is the 1 year chart of RT. It's on the daily time frame. Now, what we see here is that the prices have taken support here. Can you see? What I'm going to do is basically draw a horizontal line here, and basically support and resistance is not simply a line, but it's a zone. So you can also do something like I can draw another line here. Now, what is the basis of this line? The basis of this line is that the price I see, the price has gone up, come down. You have a wick here. Price has gone up a bit, again come down, not touched here entirely, but I've got at least two touches here. So this is the lower part of the support zone. And if you see here, I have got prices touching here and bouncing up. You see one, two. I've got many wicks and candles here. And if you see, price has just gone just a bit below. That's why I said support is a zone. It's not a line. This will basically give you enough leeway for your SL whenever you enter a trade. If you have something like this here, then you have missed the wick here. So you can do this. You can draw two lines here, or you can basically instead of this, you can use something like parallel channel here. But then I have to draw it like this. So drawing like this is not practical. So it's best to use two horizontal lines because then they cover the left to the right, and uh, and the price will keep going on and on, right? So now I have drawn a demand zone. So demand zone is where prices have bounced off. If you see here also, the prices have hit here and then they've gone up. And now, if you come here, prices are somewhere here, but they are there is some sort of support here. Now this is a demand zone, and then there is a concept uh, of uh, of drop base rally, which is also basically part of it. There is something called support and there is something called demand zone. So your demand zones are basically part of your support zone. The prices don't just bounce off. When sellers try to push here, smart money basically thinks that this is a good area, this is a good price for a buy, and prices are pushed up. So a demand zone, so a support basically is also a demand zone. Not exactly, but kind of. They kind of overlap. So if you see here, prices are coming down. I'll just zoom in so that you understand the concept. Can you see here? Prices are going down. So this is a drop. Then these two are sort of base candles, and then there is rally. So it's drop, base, rally coinciding with the demand zone. Now, similarly here, prices have, I will zoom in on the chart. go to the left. So if you see here, click here. So if you see here, we drew it here, and let's say that we were here, somewhere here in July of 23. We didn't know that it was going to bounce off here, but it has. So now there are even more touches validating the fact that our support or demand zone is proper, because see again, sellers try to push the price down, but buyers bought back. So again, smart money playing here. In individual, basically investors or traders don't have the money and the wherewithal to turn the market. So whether it's a question of volumes or turning the market or creating demand and supply zones or support and resistance zones, they are not in the position to do so. We are talking about hundreds and thousands of crores here. And even an HNI will at the most, be doing swing trading of what, 100, 200, 300 crores in a particular stock on a given day at the most. That also, I'm talking on bulk deal level. So here we've got, so here what we have is, we have a demand and support zone here. And now let's see the price has gone up. If you see here, price has gone up. There's a wick here, here. So I am going to draw an horizontal line here. I am deliberately done it like this, placed it here, so that I can show you the placement. Now I will drag it. Where will I drag it? Do I drag it here? You guys tell me. Or should I drag it here? No. We are trying to create a resistance here. Though we can have many resistance lines at various points in the chart, we will be creating it here, because this has the maximum number of touches. See the exact wick, got this wick as well, and there are so many points here. Now, but what about this wick? So no worries. We have uh, we have we will create another horizontal line here, and there we have now a proper resistance. Why are we calling it resistance? Because prices are bouncing up from there. They tried, they couldn't. Selling pressure, buyers tried to push up. See this long wick here. Sellers bought it down. So obviously there is sell side orders here. Again, they tried, but this time they couldn't even go up to this point right here itself. So there are sellers willing to sell from here up to this point. Then the price came down for a bit, cut through the 20 EMA, found support on the 50, went up. Then again, can you see there are so many bases here? So this is basically a rally base drop here. So this is a resistance as well as a, a supply zone. If you see rally, base, drop. So prices have come down here, gone up again, come down here, again taking resistance. Now, I have to show you how to create a resistance line, how to create a support line. Remember, these are zones. These are absolutely not a single line. And there are some who will say that we should only connect the wicks. Some will say we should only connect the body. Up to you. But you'll have to use common sense, which is basically quite uncommon everywhere, not only in the stock markets. So while one must try to be smart, but one must also be practical. If you use your brains too much, you're not going to end up anywhere, excepting in losses. To use your brain up to a limit, there are way things are done in any particular field, and through experience, you learn what is the best technique for you. Now, I have drawn it according to the maximum touches. Drawing these lines are subjective, and over a period of time, you may say, no, I want the line here. Neeraj has drawn it wrong. Okay, you draw it here. I'm not holding you to the fact that this is the only way in the universe to draw a line. I've drawn it on the basis of my experience. So try to get maximum touches, but don't become ridiculous. Now, if I move this line here, I'll get even more touches, but that doesn't mean anything. I'm drawing support here. Remember, prices are coming from up to down and finding support. Similarly, prices are going up and bouncing off. So this is resistance. Not only resistance, but a supply zone. Not only support, but a demand zone, drop base rally. Okay. So now question, now that we have drawn this support and resistance, what are we going to do with it? We don't do this for fun. We're doing because we're trading in the market and we want to either buy or sell. So if you were trading futures and you saw this daily candle close here and you know that I have a supply zone here and this is a respected supply zone or a resistance because this is not the first touch. Then what you could do is you could have sold a future if this stock was in the futures. You could have sold it below the low of this candle and your stop loss would be somewhere a few rupees above this point. You would have sold here below the low of this candle and your SL would be above this. And then you will basically wait for your order to play out and your target will be before a few rupees before this uh, support zone. Don't keep the target as the support zone simply because sometimes price may not even touch it and start reversing uh, because people buyers are so happy here, but now they are not getting a chance. They may buy here. So keep it a few rupees above this. But anyway, you see that the wicks have touched. So if you kept a cover buy cover order here, you would have made lots of money. We are talking, say, the low of this candle is 606 and 441. So if we go here from here, you would have made money. If I go up to this or even a bit above this, you would have made 23%. I'm not even going up to this point, and you should not. So this is how you would use resistance to short because we're talking swing trading here on daily time frame. You would short here, and your target would be a few rupees above the uh, would be above the demand zone. Now, what about what about stuff here? What about if you want to go long? How would you do it? Now, since let's suppose you're somewhere here, this demand zone is already here. You're somewhere here after the earning day, okay? And this is red, so obviously it didn't go well. But anyways, you are somewhere here on 26th October, and you decide that I'm going to go for a buy order. I'm going to place my buy order at this uh, uh, support or demand zone. So you place a buy order at this level, this blue line, and your order gets filled up. Now, what is your target? Your target ideally would be somewhere above, little below the resistance here. So you would try for a target somewhere like 608. And if you did not trail your SL, price would have gone up to here. And here, obviously, there seems to be a new resistance forming. If you see here, I'm going to make a line here. A new resistance has come up here. The reason I put this here is because I'm getting this touch. This is a resistance now and is also acting as support. So you will say, why have I not done something like this? Like this? You can, you can. If you want to, you can. So price is acted as resistance and it's come back down here. It's not still hit your SL, but you've lost so many days. So if you trailed your SL, then maybe you would have gotten out somewhere here. But if you're not trailed your stop loss, then prices now come down here, and God knows how many days it will remain here. Either it will hit your stop loss, which is somewhere here, if you're not moved it, or it may go up. Nobody knows. So this is Aarti drugs. I've shown you how to take a how to take a sell side order here from resistance and how to take a buy order from here. And your targets can be two times your SL or three times, which you would have easily achieved here. And you need not keep your target as a resistance because then it may become too much of a target, like 24%. But you can, if you trail your SL, you can keep going up, and you can even, if your price is here, though you can increase your target from here to here to hell with the resistance line because you're already guarding your profits with your trailing stop loss. So up to you how you want to do it. Some people are just happy with 1 is to 2 and then they'll hunt for another stock to get into the market. Some people want 1 is to 3. You would have got a lot of this stuff here. Now, I've explained you what is resistance, what is support, how to take a sell side order, how to take a buy side order. Let's go to another chart. I just went through these charts. These charts are cherry picked. I removed all the drawings from these charts, but I didn't waste too much time going into it because I want this to be spontaneous. So, although it's cherry picked, it's not. You see, it's the top three. I'm going to show you. Avas also post this. So, this is part of my list. So, just happened that, so let me zoom here. Now, prices are here. I can go around creating a support here, and this is all very good. But for the price to come down here, you'll probably have to cut your beard or your hair. Many months may pass. So while it's nice to draw here and you can draw it for practice, no point wasting your time drawing lines when so far away from the price. So I'll zoom in further so I can see the chart. Now price is at 656. Of course, the market is running. Let me take something close. So if I come here, I'm going to draw something like here, and I'm going to draw something like here. I'm drawing it quickly because I have some experience in the market. You too will be able to draw once you have done this hundreds of times. So, but if you're a beginner, please take your time. It's very important you draw it correctly. Now, if you see here, I have to zoom in. So I get, although I'm on the daily chart, I've zoomed in. Uh, I get as many touches as possible and make sense. I'll zoom in further. Now, to see whether does it make sense or do I need to modify it. Can you see here? This is my demand zone or my support. I've taken the wicks also here and it's making sense. Now you'll say it's cutting through, then how is it a demand? If it is a demand or a support, it should have bounced out. No, it doesn't always happen like that. What happens is price may sometimes with volume cut through here, then go up and whatever is your support now becomes resistance. Can you see price is now bounced off? Price is now bounced off. I'll, so what happens is what is what is support? This is resistance. Now it has become support. This is resistance. This is demand. And a time will come when the price will go above this, then this will become support. So zones which are first support, which are first resistance and then become support and vice versa are considered even stronger than just zones which have not been tested multiple times. And remember, the more time price keeps touching the support zone, it is finally going to break it. Same goes with resistance. If there's one touch, two touch, three touch, four touch. So buyers are testing, testing, testing. Once the supply gets over, meaning all the orders are exhausted, price will break through like a rocket. Now, I zoomed here so that you can see the left side of the chart as well. Let me minimize this. So you can see that this is a valid resistance. I can draw resistance here also, but what's the point? Price is here somewhere in the middle. These two are enough. I can even draw here. I can draw something like this here. So if you see here, this is touch, 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 down, 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 down. This is resistance. Tuck, 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 tuck. price has gone up. Now it becomes support. So, but this is just to show you that this was a support. This let me see whether this is like I just draw this on hindsight, right? Because I see the chart. But if you see here, I've drawn a resistance from this point of view. Prices are bouncing off. That's why I drew it here. And you can see it's almost touching the tops and maximum touches. Plus, it's also acting as a support here. So, resistance turn support. I'm going to delete this because while you can keep drawing, our purpose is to draw lines that are of use to us and help us to trade. So, um, here again, if you were into trading futures and if you see that prices tried to break through resistance but it couldn't, and if you see here went to a high of 709 but closed at 703, so that's a wick here, selling pressure, and the next candle opens gap up but is basically a bearish candle where you have prices basically, if you see here, this is a kind of piercing candle and it is very bearish. Some buying pressure, but buyers didn't allow the price to close down at the low, but that's fine. It's a bearish candle nonetheless, and it's at an important area. And if you wanted to, you could have taken a shot below this low here, and your target would be somewhere before this point. Or you could have trailed your SL depending on what strategy you follow. I'm just I'm just telling you this from a perspective of resistance and support. Uh, don't go into the fact that while the price is bouncing off from resistance, but the price is above EMA 20, 50, 100 and 200. So ideally, it's not a good idea to sell if you are above all the moving averages, even though you are here. Had this had this candle been somewhere below these averages and coincided with this, it would make a better shot. But since we are only looking at support and resistance, I'm just telling you how to. You could have taken a shot here, and now again, if you see here, prices have bounced off here, and again you could have taken a prices have bounced off here, and you could have taken on 15th March uh, before the market opening, you could have kept the order here to go high above the high of this candle. You would enter somewhere at what is the high here? 648.15. You could have gone at 648.20 and you would have got filled and your stop loss would be below 629.10. See what is this blue line? To look at the coordinates here, you would be keep a little buffer below this and that would be a stop loss and you're still in the trade. So this is how you would take a supply side order here. And again, normally I wouldn't take this order because this is still below, this candle is still below the EMA 20 and the below the EMA 20. So I wouldn't take a long order here. But just if you just want to, understand the concept, I'm giving you the concept of uh, support and resistance. And similarly, uh, once you broke through this here, you could have taken a shot here, and your target would be basically if you haven't drawn any line here, then it would be an open target. You trail your SL here. So you basically buy from close to support. Your order should be in the demand or support in the demand zone or the support zone, and your target should be before the resistance of the supply zone. Similarly, your sell orders should be uh, somewhere here because that's where the big money orders are, sell side orders are, should be in this zone, and your target should be before your support. So this is how you are going to trade here. Obviously, you cannot just trade it on the basis of this. You need confluence. You need to understand price action. There are many other things. on what is happening in the market, whether you see a chart pattern, what is the volume, uh, variety of factors. So, but this is, since I'm here only on this topic, I'm explaining this, though I did talk about moving averages and other stuff, just to give you a broad-based idea that don't go blindly trading amount on demand and support, but this is a good, this is a good probability trade when you buy here, because you're buying at a reasonable zone and your buy order will coincide with big money orders. As I said, they are the ones who have the money and the wherewithal to push price up. Similarly, when you sell here, you're selling at a good price and you're bound to get good money here. Forget the moving averages while I explain this for a while. And your target, your profit target should be little before you hit the demand zone or the support. Now let's go to Avas. What do we have here in Avas? Okay, I've zoomed in a bit. Price is here. So we have to, let's make a resistance here. And if you see here, touching, 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 this is acting as support. This is acting as support, broke through, price broke through, and now it's acting as resistance. And you can also put something like, so this entire thing is your resistance. Now, since we are here, but I cannot draw a chart on today's price or yesterday's price. So we have to look on the left side of the chart, which is the past. History tells us where price has bounced off from. So I've zoomed quite a bit. Don't need to zoom more. Don't want to go into 10 years in the past. Neither can you see it, but just giving you an example. So I'm already in May, 5, 6 months, almost a year back now. So if you see here, and I am just looking at this. I am not even bothered looking at this. Just so teaching you how to draw these lines. I didn't even bother looking here. First, I'll see this. Then I have seen here. So I've created this. Now I will look to see whether it's making sense on this side or not. Just because price is now broken below this does not mean that this was not a valid uh, support. Now, what? Now to increase the probability of having a good support zone, what can you do to increase it and make sure that your drawing is correct? You gotta see some green orders here. Can you see some orders are here? Some orders are here, and then you have a big candle here. So this shows that this is a proper, not only support but a demand zone as well. And you see all this. Can you see this basis? This is a drop base rally. These are all big money orders. A lot of big money orders here. But if you have too many bases here, the chances are that all the buy orders of big money have exhausted, and this demand zone may not survive next time, or this support may, because let's say in these so many days, millions of orders have got filled in, and they have got their quota of Avas financiers of this stock. Depends, no matter what the stock. Too many bases. Okay, when I say base, meaning drop, base, rally, meaning price is just consolidating, right? Big candle, no huge candles. So price, this may first of all, this is no longer a valid. This is no longer a. This is basically no longer a. I mean, no longer a kind of fresh zone, if you will, a fresh demand zone, simply because price has touched here and too many orders have gone in. But still, there was some resistance when price touched here, and then if you see here, prices has finally broken through. Buyers did try to push up, but they were not successful. And you see all these base candles, sellers, too many sellers here, and the price is obviously under the the 20 EMA and all the other EMAs. So price is in a clear downtrend. What you have is a lower high, lower low. So here buyers did try to push back for a higher high, but eventually prices, as you see now, price is going down. So in this sort of scenario, it would be better if you, with the prices below the various moving averages, it's better to go either do intraday here on this chart, or do, if you are into futures, you would do basically you would sell below this candle here. We are looking for a bearish candle, sell below the low of the bearish candle here, and you are under the averages here. And also, not only are you touching the averages, so you've got a good sell order, reasonably high. You're selling below the low here, and it's also coinciding with the resistance here. Your SL would be somewhere here, or you can reduce your SL. Again, it's an individual thing. You'll learn as you proceed what's good for you, because one man's bhindi is another man's potato. Now, liking bhindi is quite subjective. So, that doesn't make bhindi either good or bad. People love it. People don't like it. Similarly, Karela. So your stop loss is also like your Karela, if you will. Up to you where you want to place it. Place it too tight and price will hit your SL and go in the direction you wanted. And make it too high and your target becomes difficult, your position size becomes less, and your risk reward ratio R multiple will not be even 1:1, or if 1:1 at all. So again, you are going to blow up your capital sooner than later. So again, individual choice. There are hundreds of ways you can do these things, but you are your best teacher. Obviously, besides me, I'm talking after me, you are your best teacher. So, up to you how you want to place it, and your target would be before here, and you've already achieved it. And if you are trailing your SL and you kept trailing your SLs, then basically you you would have been stopped out somewhere here, because the price went up. Because if you went with the open target that the price will keep going down, then you would have gone out here. If you maintain your SL and you decided that I'll go a few rupees here, some 13.97 or something, or 14.04, you would have got your target, and you would have made money. So I hope you guys like this video. If there's some question on swing trading, or you have any questions, you need to let me know, and I will try to answer them. Please comment if you have any questions on the video I made. Also, if you want me to make any video on any particular topic in swing or intraday, in equity only, not in futures, because I don't trade that at this point of time, please let me know. Please like or subscribe my channel. It takes a lot of effort to make these videos. So please like and hit the bell icon so that you get notified whenever I make new videos. And forward these videos to people who are serious about trading and making money. And I'll see you in the next video. Thank you for watching.